Welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Friday, the 4th of September. It is non-farm payrolls Friday today. We've had a lot of movements around actually on major markets in the last few days. Coming into today, though, we're fairly settled. Nothing too significant in terms of direction. You often will see that ahead of non-farm payrolls, considering markets do look at payrolls as a significant indicator for near-term volatility. So what we've got is this dollar strengthening or dollar rebound that we've seen in the last few days just starting to stall. And that's affecting through the currency markets. Sterling slightly higher, also Aussie higher, Kiwi higher. Now, equities, massive sell-off, huge sell-off on Wall Street yesterday. 3.5% down on the S&P, around about 5% down on the Nasdaq. Huge tech-driven sell-off, and what we've seen is a slight stabilization. Now, I said in the daily report that how the market responds to this, to any sort of ticks higher, will be interesting, because if it then falls over again, that really would be a bit of an indication that the market is turning near-term corrective. But it seems to have stabilized a little bit today, but we'll see how the market sort of reacts to payrolls later as to whether that continues on the stabilization. But certainly markets are a little bit less dollar positive now, and certainly that is helping gold and silver higher. You've seen an intraday turnaround actually. Earlier on, European markets were actually lower. They've actually rebounded, and you've seen that oil has started to find a bit of support. And I say a bit of support because it's been under pressure actually for the last few sessions, really rolling over, but ticking slightly higher. But again, if that rolls over once more, and recent days have seen rallies sold into on oil, that again would be really quite a concerning move. So how these equities and oil price react to this tick back higher today will be interesting. Now, as I said, we do have non-farm payrolls. That is the main focus on the economic calendar. You've got the expectation of 1.4 million jobs. Let's get the data up. 1.4 million jobs added, down from 176 million last month in July. Adding 1.4 million jobs sounds a lot, but considering we're still, I think it's thereabouts, around 13 million jobs lower than where it was back in February, you can still see that there's a lot for this labour market to recover, and a lot of donkey work still to be done. Now, we've got unemployment, which is expected to come back underneath 10% to 9.8%, and also average hourly earnings to drop to 4.5% from 4.8% last month. But as I said, that headline payrolls data is the key factor to watch today. Now, my chart of the day is the DAX. We saw on equity markets significant selling pressure yesterday, a little bit of a stabilization, but it is interesting. This big bearish engulfing candle, this one-day reversal that you've got on the DAX, now dominates this chart. You do still have this uptrend of the past 2.5 months, but the market is now back into pivot band territory between 12.8 and 13.06. You've seen a lot of turnarounds actually around those sort of levels in the last few months, and it's back into there now. It's interesting that it's picked back up to that resistance around 13.06, where it pretty much closed yesterday, and is now sort of holding ground. So it's sort of at a bit of an inflection point, I think, given the fact that the market has rebounded quite strongly this morning, but essentially only to flat pretty much. You can see that on the hourly chart where you've just rebounded, but it's not really doing, not really following into that, because we've got the payrolls report today, which I think will be certainly near-term volatility. In the DAX, I mean, if Wall Street goes to the downside and corrects and falls over on this intraday rebound that's in prospect, then I think the DAX will be putting pressure on this uptrend. That uptrend comes in around about 12.825, which essentially is, again, the bottom of this pivot band, 12.8. And yeah, that would be an interesting point. The 55-day moving average as well, which has been a pretty good basis of support in the last two corrections, comes in around 12.755. So it needs to hold those levels, I think, otherwise it starts to become more corrective, and below 12.63 you really do start to put more of a corrective angle to this chart. MACD lines of momentum fairly solid, fairly stable, but not really all that positive, and you can still argue there are hints of negative divergence going on, but yeah, interesting moves on the DAX given the rebound. So one to watch, I think, today, DAX on this payrolls report. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos. Go to our website to sign up for our webinars, and also click to watch Trader Talks, our videos that give you top trading ideas.